Hey there, my name's Holly Donaldson, and this video is for people who are paying for their own health insurance at this point or might be paying for your own health insurance at some point in 2021. And I'd like to say I am not a CPA. This is not tax advice. This is just general information for you to consider for your situation and talk to your financial planner or CPA about. So there are some good things in the American Rescue Plan for people who are paying for their own health insurance. Now, as you may know, you must show currently an adjusted gross income of less than 400% of the federal poverty level to receive a subsidy for your health insurance premiums. And I've got a link to how that's calculated. It's based on the size of your household, but it's a pretty low number. So for many people do not qualify to get a subsidy and therefore pay very high premiums. Well, the good news with the American Rescue Plan is that for 2021 and 2022, even if you make more than that threshold, your premiums are capped via a tax credit at 8.5% of your adjusted gross income. And I'm looking at my cheat sheets here. So let's take, for example, that you have a household of one person and you make $100,000 adjusted gross income. 8.5% of that is $8,500. Now let's say that your health insurance premiums are $900 a month. Now that is not unusual for somebody in their early 60s or even late 50s. So $900 a month times 12 is $10,800. So that is more than $8,500. That is, in fact, $2,300 more than $8,500. So you would receive back a $2,300 subsidy on your health insurance premiums, which you previously didn't get. That comes out to nearly $200 a month. If you received a subsidy in the past, there has been a pause on the clawback, which means if you ended up making more money than you said you were going to, and you qualified in the beginning of the year for a certain size subsidy, and then you have to refund it, that's been paused. That has not gone away though. Now let's talk about if you lose your job in 2021. So there is some, even though that might be the bad news, there's some good news for you in that if you are involuntarily terminated, not voluntary retirement, then your former employer can pay your COBRA premiums for April through September of 2021, and your employer gets a full tax deduction for paying the premiums of employees that they have laid off. I don't know what employer would not do this. So you could pretty much probably count on having free health insurance until September, and it's not a 6-month thing, it's just this April through September period, and then perhaps switch to the private health insurance in October. Now, if you file for and receive even 1 week of unemployment compensation in 2021, then the subsidy that you get for your private health insurance premiums will be as if you were in the lowest income bracket. So you will, even though you may make more, you will get a very high subsidy for your health insurance for 2021. So the 8.5% that I talked about first, that's good for 2 years, for 2021 and next year for 2022, the cap of 8.5%. The other things about unemployment and COBRA, that's just for 2021. So I hope this is helpful to those of you who are paying for your own health insurance or thinking that you might have to. If you think that you would benefit from a more specific conversation, I encourage you to call your CFP or your CPA. That's it, and have a great day.